Hi, this is Jeff Hansen, the developer of Focus 15 Investing. This video is an initial overview of the investment approach. And our goal is to help you more than double your retirement account over a 10 to 15 year period. That is compared to what you otherwise would have using your current investment approach. In this video, you'll learn what an asset class is, why we focus on avoiding losses in the stock market. Now, we focus on asset class rotation. Asset class is just a name for a certain type of security. One asset class is stock, and stocks are very important to people who are saving for retirement. Stocks have high long-term returns, but unfortunately, they have large short-term losses. Another asset class that's important is bonds, and they have lower long-term returns, but they have smaller short-term losses. These two asset classes are the most important in most retirement accounts. Cash is the third asset class, and it has minimal long-term returns and minimal short-term losses. These three asset classes end up being very important in the Focus 15 investing portfolios. During certain market environments, we might emphasize stocks. Another market environment, we might emphasize bonds. And in another, we might emphasize cash. Now, I mentioned that we want to avoid the losses in the stock market, and this slide shows why we want to be sensitive to that. And if you look down this chart, you see some big numbers, 89%, and that's a loss of 89%, 47% loss, 40, 34, and so forth. And these have taken place over the last 100 years. The most recent one is really in recent memory. That's 2007 to 2009, a loss of about 50%. And these losses did not occur over a week or a month. They occurred over a long period of time. And so from the peak in prices to the very bottom back in the 1930s, it took almost 3 years to go from the top to the bottom. And so our goal is to avoid these kinds of long-term protracted losses. Now, the time required to get back to where the peak was can be very long as well. We want to avoid these very long numbers. We want to avoid the losses that have the long declines and the long recoveries.